thanks for joining David, Kevin, and myself for this month of July's educational video. And I think it's so important, David, to learn from history and educate yourself. Like, what do good investors do? What do bad investors do? And what are some of the habits that people have? So sit back and enjoy Kevin and David giving you this presentation. And as always, if you have questions after that, please don't hesitate to give any of us a call.
Kevin, Peter Lynch is one of the best investors of the last 50 years for North American stock pickers. And Peter ran a fund at Fidelity Investments from 1977 to 1990. And during that time, the fund itself averaged an annual return of 29% per year. Sounds pretty good, right? But interestingly, the investors or the unit holders of that investment fund, the Fidelity Magellan Fund, during that period of time only averaged 5.96% per year. And so it's really an interesting case study to show that individual investors tend to buy at the peaks and they tend to sell at market lows. And they've done back studies on that fund to show exactly that during market peaks, people were buying the fund like crazy. And whenever the market tended to bottom, that's when also the fund saw its biggest outflows. And we're seeing that this year in the markets and with fund flows in Canada right now, aren't we?
We are. On your screen now, you'll find the last 3 market corrections for the S&P 500, including 2022. You will also see the investment flows during these same periods. With almost perfect correlation, investors redeem the most amount of money at the exact bottom of a market correction. This happened in 2018 when the S&P 500 happened to bottom on December 24th, and the Canadian investors sold more than $8.3 billion worth of stocks. In 2020, the S&P 500 bottomed on March 23rd, and investors sold more than $18.2 billion worth of stocks at market lows. Once again, this trend is unfolding here in 2022. While no one knows when the market is going to bottom, investor redemptions in June may give us a sense that we are maybe getting close. After 2 months of negative flows, where investors pulled over $4 billion in April and $7 billion in May, it is estimated that over $10 billion has been redeemed from the market in the month of June, marking the largest monthly redemption during this correction. Now, this would make sense because the market also reached its lowest point on June 17th, when the S&P 500 was down 22% from its peak.
Mm-hmm. Yeah, and while no one knows where this market's headed in the short term, it's a pretty good contrarian indicator for us to see that fund flows out of long-term stock funds were in excess of probably of 10 billion in June, with pretty big outflows in April and May as well. Past market bottoms like we've seen in 2018 and 2020 showed similar statistics, and then we had a big market recovery. Now again, nobody knows that and can say for certain that that's going to happen again this time around. It may be another month of outflows before we ultimately reach the bottom. No one can ever pick the bottoms here, but history has shown us whenever people are panic selling, like seems to be happening in the past couple of months, that's typically a good time to buy, or at the very least stay invested. Right now, Kevin, there's obviously a lot of things going on in the world with inflation, with a war in Europe. So there's lots of pessimism out there. And I think that probably a lot of that pessimism is priced into the market at this point. And it's important for people to recognize, hey, it's worthwhile being optimistic too. Good things can happen. We can have inflation start to slow down. These interest rate hikes can have that effect. Without necessarily pushing us into a recession. We can have a resolution eventually to the conflict in Europe, which would help oil prices lower overnight, right? So good things can happen too, and it's important to keep sight of that as an investor. And just as Peter Lynch once said, the key to making money in stocks is not getting scared out of them. And we absolutely know that this is true. Time and time again, we've seen just in the last 5 years, 3 market corrections in excess of 20%. But overall, if you stayed invested throughout the last 5 years, you've made some pretty good returns despite those periodic downturns. Anyways, if you guys have any questions or want to review your portfolio with Kevin, myself, or Harry, please give us a call.
Have a great day.